What is liquidity inducement in the forex market and how best can you use it to become profitable in 2025? I've realized that a lot of traders do not know what liquidity and inducement are in the forex market, and I'm going to show you how to indicate the liquidity and inducement zones in the forex market. Before showing you the concept on the live charts, let me explain what inducement in the market is. Inducement zones in the market, these are zones that attract trade action in the forex market with an intention of creating manipulations to attract a lot of stop losses and take them out later. So guys, I'm going to be showing you how best you can indicate these zones and make entries out of these zones that are very much profitable. So guys, this is what we are going to do. I'm going to show you the different inducement zones in the market and how price is induced. Before we go into the live chart, as you can see, I'm going to use my drawing board to actually show you how price will act, how price is going to act. Here they will tell you traders may use inducement zones to identify potential areas in the market of manipulation, stop loss. They use it to find stop loss orders and plan trades with high probability. So guys, these are some of the way traders use these zones to trade. And when we are using these inducement zones, let me show you. As you can see, we have the way I've sketched it. So price will first print lower lows, but you can see clearly that there is an imbalance between this low and this one. So price will have to come and really fill this low, will come and fill this low, inducing it like this before actually it comes to the downside like this. So many traders will have their stop loss here, kind of putting them there. Some of them will be there and they will be taken out. So this is the way we shall trade this zone here. So guys, I'm going to take you into the live chat and see exactly what happens in the live market. Yeah, so guys, as you can see, we are going to be spotting out the inducement zones and the liquidity zones in the market. As we said, these are zones where that trigger trading action with an intention of manipulating the market. Yeah, price has to first create an imbalance, as you can see here. As you can see, let me first zoom. Yep, let me first zoom properly. Yeah, as you can see, price first created an imbalance, yeah, between this side and this between this low, this side, this lower low and this lower low. There is an imbalance, there is this imbalance, as you can see. So a lot of retail traders are gonna place their stop losses here at this area here. They're going to place their stop losses at this area. So guys, don't be one of those traders that are gonna be trapped inside this zone. So guys, you always have to first wait for the price to be induced, therefore creating this level of liquidity, then waiting for the liquidity to be taken out. As you can see on this side, the liquidity was taken out fully. In other words, the price was now balanced and it headed to the downside. The same applies to this lower low. The same applies to this lower low. Price was induced. In other words, it created a lot of imbalance between this high and this one. So price came out to balance it and it took out all the literary traders that were here. In other words, giving us this type of market structure, which led to the going to the downside. So guys, don't be one of those traders that are gonna be trapped into these trading imbalanced prices. which will lead you to making a lot of losses. I can show you variety of price imbalances which were taken out. Another example is here. You can see that price created this lower high. Many traders put their stop losses here, but it balanced the price between this lower high and this one. It balanced the price, then it headed to the downside, to the original direction. So guys, you need to be keen when spotting out these key zones, in other words, to get profitable trades in the long run. You can see even here what happened. Price gave us these lows, these equal lows, but it later came. You can see it's not balanced. But it later came, took out this liquidity, hence giving us the push, a vigorous push to the upside. So guys, when you're trading this type of trading, ensure that you spot these liquidity zones, inducement zones clearly, for you to be able to spot clear reversals to the downside. This method is actually at least 65% profitable. If you be using it, I'm sure you'll see a change with your strategy. You'll at least make some more money than the one you've been making, and you'll avoid making many mistakes in the market. So guys, that has been it. See you in another video.